But in the meantime, the other stock that we're discussing this morning is Paytm. The board has approved an 850 crore buyback with a maximum price of 810 rupees a share. Digant Haria, the co-founder at GreenEdge Wealth, joins us now to talk about that. Digant, the buyback amount may come as a bit of a disappointment to some on the street, but the larger question is, now the street will move on to whether the company can deliver in terms of earnings and growth, right? In that context, what is your view? And also a quick comment on the buyback.
Yeah, thanks, Sonia, for having us here in the show. See, firstly, all these years we've learned that, company does a buyback or a dividend when, they have a lot of cash and they don't need all that cash, for use in the business. And, these cash has been generated from the profits in the business. Here this buyback seems a little more surprising because the cash that will be used in this buyback, they got this cash from the IPO. The company has never made a cash profit. In fact, it has made a very huge cash loss at the operating level. They wrote in, some people are trying to draw conclusions that Paytm is doing this buyback because it is very confident that it will break EBITDA, it will break even at the EBITDA level X of ESOPs in September 23. Now, so many conditions are there that, because I'm going to make some profit, small operating profits in 23, why do I go and do a buyback today? So I think the purpose of the buyback is not very clear, and it will end up confusing a lot of investors who would not, have seen the history. We saw that when the Reliance Power IPO failed, they announced a bonus issue in 2007-8, but that does not help the stock because, end of the day, you have to make profits and then use that profits to reward shareholders. So the amount, I think it's good that they're only spending 850 crores, Sonia, because we are well thinking, oh, 9,000 crores cash is there. So at least that much protection is there. Now 1,000 crores straight away goes out of that 9,000 crores. And if the business model does not turn into the profit, slowly, this cash is going to be eaten up by the business. So I think it's not very clear why they should go for a buyback. It's very strange, rather, they should, spend 1,000 crores here rather than, trying to get into some profitability using this cash.
So, Digant, would you say that this Paytm event, the buyback, is actually a non-event? Because as you said, right, had they spent a lot of money on the buyback, again, question marks would be raised that why are you using the IPO proceeds when you're not generating cash, right? Why are you using the money to go in for a larger buyback? If you do a little bit less, then you would say that, oh, the size of the buyback is underwhelming. So you can argue both ways, right, as a Paytm shareholder. But on the whole, would you say that this is a non-event from a stock point of view?
Yeah, I think it's a non-event. I would say it's slightly negative because, like the cash is being used, 1,000 crores straight away goes away from the valuation. Then, hardly it matters on the overall market cap. And see, this is an open market buyback. And we have seen that in the past, a lot of these buybacks have not, they have not been able to buy back those number of shares in the stipulated time period. So they may not end up doing that whole buyback also. So I think it's quite a non-event. It should be ignored. Paytm investors should just focus on, whether at this market cap and this price, is there hope to make money in the future? The answer is very, a resounding no, that it's not very clear because, they are touting BNPL and loans as their next profitability driver. I think they have a lot of hurdles to cross, the RBI, the regulatory comfort on the way they lend, the way they give guarantees to the banking partners. So I don't think I'll take things for granted, for something that will happen in 26, 27, this company will be hugely profitable. I don't want to pay so much today. So I think we have to look at this stock irrespective of the buyback. And if I look at the stock irrespective of the buyback, there are a lot of challenges ahead. So this valuation is not very cheap. And, the investors should be very careful on just buying the shares for the sake of buyback.
Digant, I remember last time, I think you mentioned this now also, and correct me if I'm wrong, you mentioned Bajaj Finance is a better option, right? This year is one of those few rare years where Bajaj Finance, if it stays here, will end lower for the year, I think. Underperformer. Good price to buy?
See, Bajaj Finance, in the last decade, all these banks used to grow at 12, 14%. Bajaj Finance used to grow at 40%. So that high valuation Bajaj was commanding was because there was a very high growth differential of Bajaj Finance versus the rest of the banks. Now, today you have large banks like HDFC, ICICI, Axis growing at 20%, maybe 20% plus. And Bajaj's growth rate has come down from those 40% days to 30%. So I think some more time-wise derating of Bajaj Finance is bound to happen. I don't see this stock, making new highs anytime soon. I think Bajaj Finance has become very large. We all have to accept that 25% to 30% may now be the new number. And the segment which Bajaj Finance lends to, which is not the top 1 crore families, but the next 5 crore families, that segment itself is under a bit of stress. So I think Bajaj Finance best left for time correction. Maybe if it corrects a lot, some long-term investors may buy, but otherwise I think